Volatility just bounced big. Rates flying. TLT dumped. Oil broke down as expected, and the SP 500, well, that was an impulse down. Welcome to Daily Market Waves by Investing Angles, where every candle speaks and every Elliott whispers the next move before the crowd even blinks. And today we start, as usual, with the volatility index. These are the daily candles. They are strong, bullish. For the index itself, we have a tower top, and potentially this could be a tower bottom, and this could be potentially a double bottom. And if we see a strong move upward with a gap tomorrow, we could consider this as a bearish island. And now this is the futures. Futures formed a very strong bullish engulfing, and the chances for a move higher are very, very high here. So speaking about the volatility on the weekly frame, so we had a disconnect last week, and we had a message from the futures that the futures were refused to close below this line and technically leaving this bullish. So today we are seeing that there is a chance for forming either harami, bullish harami for the futures, or if it pushes higher in the next 2 days, it will be an inside up, a very strong bullish candle. Speaking about the weekly on the index, it's still unclear. Well, it could be a kicking, bullish kicking, but let's see how it closes on Friday. So that's the perspective for volatility. So tomorrow is expected to be highly volatile day. Now let's talk about the bond market and see what bond market prepared for us. So the rates are flying, all of them, 2, 5, 10, 20, 30 years, close today with very strong green candles. And if you look at the bigger frame, it is also looks like they are shaping for the bullish continuation candles. Now, if we look at the bigger frames, so this is the weekly closure, potential weekly closure for the 10-year yield. So the daily is clearly bullish. The weekly has a very good chance to form a bullish continuation candle. And yesterday we had a closure of the 8-week frame, and it technically confirmed a bottom. And now we are looking for a higher high in the next 8 or more days. So that's the perspective candles. And just a little warning to our Canadians, to our Canadian friends. So this is potentially a rising 3 methods on the weekly frame. So we've been talking about this for a while, and after 5 weeks of consolidation, the rates are finally moving for the 5-year yield. Well, that's the perspective to be aware of. And now let's have a look at the 20-year yield, American, US. This is our chart that we are tracking since the end of April. So far, nothing changed, just slight adjustment to the targets. And if this wave continues here, and it looks like it will be, so we should be preparing ourselves to 5.7, 5.5 rates in the middle of summer. So let's see how it goes. Now let's have a look at TLT, the inverse counterpart for the 20-year yield. So what we are seeing, a very strong bearish continuation candles on the daily frame, on the 3-day frame, and on the 8-day frame as well. So at this point, I'm not seeing any potential signal for reversal. Once we see it, we will definitely discuss it. And speaking about the chart, this is the chart that we shared back in April 30th with our members when TLT was 89.45, and since then those who listened would have avoided the losses, fairly significant ones. It's 6.3% of after the call. And so far we are not changing our targets here, and I'm considering this as a wave 3 continued here. The bigger targets we will discuss over the week in our weekly digest on Saturday or Sunday. So now let's have a look at the dollar. That's what the dollar candles are telling us. So yesterday, dollar technically confirmed a reversal, and now we have a freshly made 8x20 EMA bearish cross, and at the same time, dollar negated the impulsive structure here. So while we are looking for a continued reversal and a continued move lower, now we have 3 black crowds most likely for on the daily frame. The weekly, it looks like it's gonna be a reversal candle, and on 8-day frames, it's unclear. We need to see how it closes. So speaking about the Elliott Waves, this is the chart that we've been tracking for a while. I think that we are going for one more lower low, and this would be wave 5. I think this was potentially wave 3 and 4 here. And so the targets remain the same between 96 and 98.3. And after that, I would expect an impulsive wave up. And this is how it looks on the short-term frame. We have a fairly clean impulse down, and now looks like dollar is forming wave 3. These are the preliminary targets, and this is the most typical targets, somewhere between 97.8 and 96.8. So these would be the most typical based on Fibonacci ratios targets. Well, that's the perspective for gold, for dollar, and I'm really curious how fast this wave will develop, whether it completes in May or it moves into June, because it will be critical for forming the monthly candles and the bigger ones. Now let's move on to the commodities, and we have quite a bit to say about them today, and we will start with oil. So oil is doing perfectly. Yesterday we didn't have a video, but we discussed with our subscribers on the website in our daily report saying that oil is not going up, so it's formed another bearish candle, another failure to form a bottom here, and the chances for a move lower are significant. Now we are seeing oil still attempted to move higher, but it was clearly reversed, and now we are looking for a very huge candle, huge hammer, which is also bearish engulfing for this little doji here. Speaking about the weekly frame, we will be looking for a bearish engulfing at this moment. And this is the 10-day frame, which closed yesterday. We discussed it earlier with our members, saying that this was the move about 3 weeks ago. We discussed it saying that there's a potential to move towards 64, and this is exactly what it did, and now we are seeing a reversal. There is a possibility that the flag is complete here, and we are moving lower with oil. So this is the chart that we discussed just a few days ago, saying it's not clear what oil is forming, whether it's going to be an impulsive wave up or an impulsive wave down. Obviously the impulse down has been invalidated. Now we can remove this particular count, and what I'd like to say that this wave that oil formed has been a diagonal for wave 5, and we have an impulse closing with a diagonal. Now this wave looks impulsive, and now we can even try to evaluate it. So this is wave 1, 2, 3 is developing. Wave 4 most likely is going to be wave 5. So this would be somewhere here. So this is 1 point. So it's probably close to completing wave 3 at the moment. Once we see it, we would be able to closer evaluate with more accuracy the next potential move. And obviously we will be discussing the larger picture and the helicopter view in our weekly digest on the weekend. So now let's move on to the next one. This is the closure of 3 large oil companies: ExxonMobil, Chevron, and ConocoPhillips. All of them closed today with bearish candles, and it's not a surprise at all. Yesterday in our daily report, I said that these candles are not looking bullish at all, and we were looking for lower prices today. And the freshly made 50 by 100 days moving average bearish cross for Exxon is not encouraging at all. Well, now let's move on to the next commodity. That's natural gas. And I've heard a few feedback from our members saying that I've subscribed, but I'm not getting alerts. This is because you haven't hit the bell. Hit the bell and YouTube will remind you. It won't remind you unless you ask. Click the bell so you never miss a critical market turn. So speaking about natural gas, after very strong bullish engulfing, we were looking for either immediate action higher or a consolidation. So natural gas took a more moderate path, and now the perspective is perhaps to move a little flag here, maybe to move a little lower before resuming the move upward. On the 3-day frame, which is started just developing, we have a strong bullish hammer, potentially reversal one. We are looking for a green candle next. And on the weekly frame, let's see how it develops. If in 2 days we are seeing a bigger green candle, most likely this red bearish engulfing will be negated. And speaking about the chart, this is what we have discussed back in the middle of the May, saying that natural gas has a chance to move toward this target, and after that it will be a rally. So far it hit it right in the middle of this target, and the wave up looks impulsive so far. So once we have this impulse, now perhaps a chance to consolidate. So technically it would align with the candles, and maybe slightly lower here once the consolidation is over. Perhaps next week we are going to see a very strong rally. That's our perspective for natural gas. Now let's talk about gold. Let's talk about gold. By the way, quick checkpoint. If the previous breakdown helped you clarify the direction of risks, let me know by tapping the like button. It's a small signal, but it helps more than you think. Now let's talk about gold. Gold looks bullish, and considering bearishness of dollar, I would expect gold to move higher. The question is how high it would go. So at this point we have a freshly made 8 by 20 MA bullish cross and a move above strong support lines. I would say that gold is going to move higher. Whether it's going to hit all-time high, it's still a question, but there is a possibility definitely. 2-day frame will be closing tomorrow. Yesterday, on the 2-day frame, gold formed a very strong tower bottom, and we are looking for a move higher. And another interesting thing, so yesterday gold had a chance to form a top on the 8-day frame, but it was pulled back, and now we have a bullish continuation formation. most likely we are going to see higher prices. The question is how high. And now we can try to estimate it with Elliott Waves and classical patterns. So what we are seeing here is potentially a bullish flag that gold formed for wave, one of the waves. It could be wave 4 or it could be wave 2. So now we have a flag, and if it moves above here, well, then we would be looking for this particular target. We discussed this in the middle of May, but this potential target, and if you remember, I was talking about three white soldiers on a 4-hour frame, and it was a very strong signal. So now we have wave 1, wave 2, wave 3 potentially develops as an impulse, and we have to remember that wave 5 is usually the longest for commodities, particularly for gold. So this chart remains active, and I would say that this blue will have more probability right now than the red path, potential red path. Well, that's for gold, and now this is an interesting, very interesting point. So we had a MACD bearish cross on the 3-day frame, and the weekly is still forming. So I think that this weekly closure would be critically important, and we will discuss it in our weekly video. So join our weekly digest for commodities, for stock market, and for strategy. And in one of them we will be discussing dollar, and the commodity obviously will cover gold. So this weekly closure will be of critical importance. And speaking about GLD trust, so at this point the odds are bullish on the daily frame, most likely a reversal, and the question is whether it's going to hit an all-time high or not. So this bearish setup is still in play on the weekly frame. So let's see how it develops. So it needs to close above this line, above the high line. Let me change the color here so it's easy to refer, above the green line. And if in this case we would be looking for higher prices. So far this path is of lower probability. Now let's talk quickly about silver. Silver, whether it's aligned with gold or not. So it looks like on the daily frame it is aligned, it is bullish. It formed after yesterday, it formed a bottom. How far would it go? That's still a question. And in order to confirm it, silver has a better candle setup, so it needs to close above this high on the 5-day frame, which will be sometime next week, Wednesday. And on the weekly frame, we have a more immediate target. If it closes above this line, we would see another week higher. And but for the entire reversal, silver needs to close above this high. And this is the week of last week of March. If it closes above this high, then it will be a bullish continuation. Now let's have a look at the charts. So the charts remain extremely complex, and we have an impulse down, potential impulse up. So this wave could be an ABC or WXY for wave 2 if it moves higher. However, it needs to close above one of these lines that I allocated in red. So in this case, it would be a green continuation. However, a failure would be costly, and we would be looking for a more complex wave. At this point, there are so many waves on the chart. The only thing that we can trust is candles, and the candles signal that silver would move higher. How high? That's That's the question. And now let's talk about uranium. So this is what we were looking for. So uranium today formed potentially a hammer, but given the context, this could be a bullish candle as well. And on the 3-day frame, it closed very strong bullish candle. And on the weekly, in 2 days, we are expecting also a bullish candle. And if it pushes higher, this will be a 8x20 MA bullish cross. So the global uranium ETF is looking bearish at the moment. If we look at the energy fuels, AAPL, so far the candles are bullish. However, this upper shadow is a bit concerning, but not hugely at this moment. And the 2-day frame closed with a nice bullish engulfing. So I would say together these will push price a little higher. And on the weekly frame, it's still undecided. So a move higher would likely cancel this red candle and suggest the energy fuels moves up. So at this point, for energy fuels, Elliott wave formation, I think that wave 2 is done. This wave looks impulsive so far. Let's see if it develops into a bigger impulse. Once we can see wave 5, we would be able to estimate the next move. And the final for the uranium complex, I'm talking about Chemical Corporation. So far, the candles are bullish, and this potentially ceramic cross, it needs to be confirmed. And on the 2-day frame, it's also a bullish closure today, and the weekly looks so far so good. But if bulls were able to hold this momentum for another 2 days, we would be looking for higher prices. And there are still quite a few uncertainties, and as once we have the weekly frame, I would be able to chart all three from the larger perspective. So tune in for our weekly update. Now let's talk about the stock market and let's see what it tells us. So today's move was a very strong, very aggressive, and very damaging from the candles perspective. So let's talk first of all about these ETFs, SPY, QQQ, DIA, and IWM. So what we are seeing here, a very strong confirmation for bearish Harami that I discussed yesterday in the daily update. And now we prepared for this. So this is Nasdaq. Also, until the last couple of hours, I was thinking that Nasdaq is going to hold, but in the end, it just lost everything and closed below the Monday's low. Dow Jones is probably the strongest, and I'd like to say that Dow Jones formed a 100 by 200 daily moving average crosses, which is considered a death cross. Russell is also bearish, so technically it most likely confirmed a double top here. And speaking about Dow Jones and Russell, they have a chance to form a bearish island here. So if they open with a gap tomorrow, this formation would be a bearish island. The same for Russell, and by the way, the same for SPY. Now let's have a look at the futures, which just closed. So the same picture. S&P 500 is down, and the freshly made 100 by 200 days moving average cross. So technically we have 3 crosses for Russell, for Dow Jones, and for S&P 500. Nasdaq is the only one which is still holding the fort. Let's see what happens next. And if we look at the weekly formations, these are the candles. So if let's say the weekly closure was today, Dow Jones and Russell would form a reversal candles. Let's see what kind of candles form S&P 500 and the Nasdaq. So if they move lower in the next 2 days, it will be an inside down candles. And now let's have a look at the technical perspective. So I've been talking about this MACD bearish crosses on the monthly frame for a while, and they didn't go anywhere. So if bears were able to keep the momentum till the end of the month, then these crosses will stay and most likely expand. Now let's have a look at this one. This is the fractals that I discussed just on May 12th, and what I was talking about this particular these particular formations. So from the candle perspective, they are identical, and they have very strong technical support by multiple indicators, and also from Fibonacci perspective, ratios and everything. So let's see what kind of candle right now is S&P 500 develops. If it's going to be the red one like here, or like even a bigger one, then we might have evidence for a continued move lower. And in the weekly digest, I'm planning to discuss this particular frame, this particular fractals with better depth, and also will provide evaluation of the next targets using different Fibonacci ratios. So this is the chart, Elliott Wave chart, that we've been tracking since April 22nd. Yes, correct. So April 22nd, when we said that S&P 500 moving towards these targets, and actually it moved a little higher, and it made 13.5% was after our call. Now it is looking down, and while the wave 3, the count for 3, 4, and 5 still remains on the table, I'm a bit concerned about it. And I think that once S&P 500 breaks through this blue horizontal line, it would be an invalidation of the green impulse. So far, this purple and red path are having better odds. Now let's have a look at the chart from this perspective. So this is the same wave that also we discussed way back in April 22nd. This we were able to put more clear targets here, and 559.20, this was our top target. So the index pushed to 59.70. Well, considering the timeline, it's pretty good call. And now it looks like it is going down, and now it's time to check the micro wave. So this is the chart that I shared yesterday with our subscribers late night, saying that this was a clear impulse and we are looking for a bigger impulsive wave down. Well, that's what is happening right now, and the only thing that with this wave right now, it looks like a leading diagonal with 3, 5 waivers, and I could consider this as wave 1. And now we can try to do an estimate. Let's see how far it might go. So if consider this is wave 1 and this is wave 2, then I would be looking. So by the way, wave 1 was huge, and I would be looking for this particular target here. So this would be somewhere between these and even this. So this would be my target for wave 3. Depending on how wave 3 unfolds, then we will talk about wave 4 and 5. So far it looks like this. And speaking about the targets, so it's 58.17, 57.32, something like this. So this is the target for wave 3. Let's see how it opens, how the futures open in 30 minutes, and we will take it from there. So that's the short-term perspective, and the long-term we are going to discuss in the weekly report. Speaking about the sectors, all sectors today formed strong bearish reversal or continuation candles. Continuation is the only one is energy. Everyone else formed either tower top like utilities, double top for financial, tower top for industrials, and double top, most likely double top for technology. So everything is bearish and no points of discussing it. So we are looking for a continued move down. Now, if we look at large caps, so I would say that Microsoft is the only one which is not confirmed yet. So Amazon, this is the bearish continuation for Amazon. Apple is obviously bearish. Tesla, it's an interesting point. If you had a chance to watch our alert on Twitter, this is something that we shared at 9:07. This is PST time on Twitter, saying that Tesla is about to fall hard, and it was 345 at the moment. So it ended with at 331, losing almost 4% in just a few hours. Well, that was our alert. If you're not following us on Twitter, well, it's maybe chance to start. Apple is bearish. Nvidia confirmed a bearish move on the Harami candle. Meta is still thinking, and Google Alphabet is also thinking. So this candle is neither bearish nor bullish. It needs a confirmation. And the Berkshire Hathaway is forming a, this is technically a neutral candle. Let me see the 2-day frame. So it's well, it's bearish, but very moderately. I would say it's closer to neutral. However, freshly made 8x20 EMA bearish cross, it's most likely this is going down. However, not very fast. And if you remember an ending diagonal that we discussed for Berkshire Hathaway, maybe it's time to review the video again and see what the targets are. Now let's move on to the next subject of our discussion today, and this is Nasdaq. So this is the chart that we shared. First of all, it was April 22nd when we said that Nasdaq is going to hit 20,000 to 21.4, and it did perfectly, moving here. So the top was 21.56, and now I'm looking for potential fractals here. So I discussed it a few days ago, saying that this particular wave and this particular wave, they are like brothers. So the only thing, they have different degree. So obviously this one is higher, and if we look for potential move down, let's see if it confirms on the weekly frame. So once we have a confirmation, we would be looking for wave C somewhere here, and we will be talking about the targets and also the potential counts. So far, all counts remain on the table. It's the purple one for a bigger wave B, or the green one is still on the table. So if we don't see a very strong continuation in the next 2 days and the flipping on the weekly candle, then the green when the green count could be invalidated. And now let's talk about the features of the day. And I picked Home Depot as one of them. Let's have a look at what we discussed back in March. This was our projection for Home Depot. This is what we said, that Home Depot formed a very nice impulse down, wave 2 potentially, and forming another impulse, and it might even form a bigger one. But let's see what happened next. So we can see, so the wave 3, I'm keeping the same. So wave 3 was shorter, slightly shorter than I expected, and now we have wave 4. So it's not wave 4 anymore because it overlaps with wave 1. So now we are talking about potential wave A. So we still have an impulse here. I'll keep it like this. But this is wave A and this is wave A. And this is wave B. And I'm changing the color. So this is wave A, B, and this is wave C of A. So now we are talking about this possible count. So wave A, B, C, and this would be wave C. I'm looking for wave C down here. So removing blue count, it's did materialize. So this is still potential for wave A of a bigger correction, but let's not be that pessimistic at this moment. So that's what I'm thinking of Home Depot perspective. And speaking about slightly larger frame, this is the one that we discussed back in March when the Home Depot completed an ending diagonal, and our target for the move was 270. So this target remains active. Nothing changed. The only thing is that right now we are looking for a corrective action, and I'm changing this wave, so it's going to be A, B, and C towards here. So, and I'd like to change the chart. So this is what changes right now. Instead of 1, 2, 3, 4, 5, we are having A, B, C. That's the perspective remains the same. I'm still looking for this diagonal to be complete for a move after the diagonal, and this would be a drop of about 40% of the most recent top. That's the perspective for Home Depot. And now let's have a look at another big one, Apple. What we are seeing today is Apple technically confirming a top here and is moving down. The candle is bearish on the daily frame. We have strong technical support by indicators, recently made 100 by 200 days moving average cross. On the weekly frame, if it closes like this, it will be a reversal on this topping candle. And that 8-day frame today closed with a bearish candle generally. Well, that's candlestick perspective. And if we look at the monthly frame, the monthly closure previously was bearish. Right now we are looking for a continuation. However, if it remains within this lower shadow, it could be a stopping a reversal candle. Let's see how it closes. 8 days to go. So this is the perspective for Apple, and I think it's if you remember our charting earlier this year, so this was our one of the initial calls on January 16 when Apple potentially formed an ending diagonal. and we said that this is going to be an ABC correction or something like this. So I'm still keeping this chart as is, and the only thing that it might develop an impulse here, and in this case it would be an even stronger move. So if this the very first wave down and that Apple makes it to a new lower low, especially if it makes it in May, it will be a very strong signal for continued move. And I would be looking then for wave A as wave A of a bigger correction. So in our case, it would be A, B, C. So we might have a horizontal move for several years, bouncing between 164 and 250 or something. Well, that's the perspective for long term. Speaking about this one, the technical call, which we made on April, saying that Apple is about to form a MACD bearish cross on the two months frame, and it looks like it is going to make it. It's going to make it. So if this cross happens, then we would be looking for at least several periods of bearish market, bear market, and these would be the targets. So the targets are quite wide, from 212 to 46. This is the range based on some statistical estimates. Well, that's the perspective, and the midpoint 133. This is the most probable target for Apple for this particular reversal. And the final chart that we discussed multiple times, this is Apple since the middle of December. It formed an impulse down, a corrective wave up, and another impulse down. So far it could be wave A, or looking for a bigger wave B, or it still can be wave 4. This one, wave 4, if Apple makes a new lower low. I would consider it as wave 5 of wave A of a bigger correction of a higher degree. So that would be the perspective for Apple. For Home Depot, as you know, these two have huge impact on Dow Jones and the other indices. Now let's wrap it up. Volatility surged with authority. Yields lifted off and TLT took a sharp hit. The dollar might be finishing its final impulse down. Oil followed the bearish set script perfectly. Natural gas is catching its breath before the next move. Gold and silver looking increasingly bullish. And uranium is pushing higher, right on schedule. The major indices, especially SP 500 and Nasdaq, recorded impulsive drops. This could be the beginning of something far more serious. And if you caught the signals in Apple and Home Depot, you already know why today mattered. If you're looking for wave charts, setups, and high probability signals before they go mainstream, head over to investingangles.com. Our new weekly digest membership just launched, offering deeper forecasting for committed traders on the weekends. If you found value here, give the video a like. Drop your tickers in the comments, and don't forget to subscribe and hit the bell. Without it, YouTube might keep you in the dark. To support our independent work, consider leaving a super thanks. And most importantly, share this update on X, Reddit, Discord, Telegram, WhatsApp, wherever smart traders gather. At Investing Angles, we don't follow the markets. We forecast them before the crowd even blinks.